The best ETFs on the ASX are up between 10 and 12% over the last month. This gives us an insight into the leading companies on the ASX and globally as well to see how they're performing against each other. And that determines the leading market thematics, which we're connecting with the top performing companies for better trading, because that's what we do at Finer Market Points. You can like the video to support the channel, click subscribe for updates, and comment below to let us know which ETFs or thematics you're trading. Now, when we have a look at the best performing companies, we want to understand how they're moving in the context of the rest of the market. So we want to know what the market's performance has been like as a reference point to see how that's performed for these ETFs that we're looking at. First off on the chart here, we can see the ASX top 200, and it has been bottom left, top right, consistently moving upwards. And we do know that it has put on about 4.7% over the month. Relatively to the NASDAQ, that's exactly the same performance as we stand before open Monday morning, 4.7% gain over the month. And in comparison to the S&P 500, that is flat for the month, up 0.25%. Big drop there on Friday that we can see on into the close. Now, when we have a look at the best ETFs on the ASX, we see that ERTH has been the sixth best performer. That's putting on performance over the last month of 10%. ERTH, so that's BetaShares ERTH Opportunities Fund. We're going to have a look to see what the constituents are within this ETF. So we bring this out full screen for you and understand the fund's objectives. So what it's looking at is 100 leading global companies that derive at least 50% of their revenues from products and services that help address climate change and other environmental problems through the reduction or avoidance of CO2 emissions. So this covers clean energy providers. We're also looking at leading computing companies that are tackling green transport, waste management, sustainable product development, and improved efficiency and storage. So that's a broad spectrum, but we're looking at companies that are helping the Earth impact or reduction of CO2 emissions. We've run through to have a look at sort of the sectors, but also the companies. So here are the top 10 holdings. We've got DocuSign, which many of us would have seen in submitting our tax returns through our accountants, very popular in Australia there. Zoom video that pretty much anyone in the country, anyone in the world has become familiar with, or the developed world at least, in the last 12, 18 months. Then we've got other companies like Tesla, East Japan Railway, and other companies that are on the forefront here. But to understand it, we also want to look at the sector impact, because it is a dramatic movement. 28% in other, which is rare to see for an ETF like this in a thematic that is normally quite concentrated within the industry, but the thematic is broad reaching. So we're getting a look at sort of new world companies that are driving performances higher. The largest one is building products, which is quite interesting to see because it is normally quite a capital intensive one. So we're looking at companies on the forefront in that space. Interesting to see indeed. Now we want to move back. We want to have a look at the fifth best performer, and we're going to see that there's also another BetaShares product, which is gear. We won't spend too long on this one because we've seen it many times before. As the indices are powering higher, it's one that keeps on coming up. For some reason that hasn't come up in Iris correctly, and that's still not coming up. So what we do know is that performance is 10.9%. It's a geared exposure to the returns of the Australian share market. The largest 200 equity securities on the ASX by market cap and indices that we know very well, and it's geared into it. So we're looking at sort of gearing of 50 to 65%. And we will see over the month as we compare that to the NASDAQ, which is the next best performer. We've got geared long NASDAQ. So that's LNAS, which is brought to us by ETFs. And we do want to have a look at these two ETFs in comparison, because we know for the month, the underlying indices have provided the same performance, 4.7%. So gear, which is a BetaShares ASX to ETF, 50 to 60% geared into it. And the underlying is the ASX 200 for Aussie, and that's just a distribution of the ASX 200. There's nothing special there. It does what we need it to do, gear us into the Aussie. And then long NASDAQ does a similar thing. So what we're looking at here is a 1% movement on the NASDAQ. On average is about 2 to 2.7% in this product. Then when we move back to have a look at how that performed over the month, we can see that the two indices were rather similar, 11.2% for the long NASDAQ. And we know that BetaShares gear was up 10.9%. So very similar when we're looking at the right-hand side of the table. NASDAQ is 4.07 and XJO is about 4.7. So similar gearing, similar movements there. Now we move up to the third best performer, which is Cloud, CLDD. CLDD, that's put on, it's BetaShares ETF once again, it's put on 11.19%, only just beating the long NASDAQ. And then when we have a look at CLDD, we want to drill down and see which companies are being collected in that. So we know it's Shopify, Zscaler, Zoom, which we've seen before, Dropbox, a company that many Australians know really well, Salesforce.com, another company that many know, a very large multinational. So they're working on cloud computing. And the reason why this is important and why this thematic has been picked up is that it's obviously tracking the index of global cloud computing companies and one of the strongest growing segments on the technology sector, because much of the world's digital data and software applications are still maintained outside of the cloud. So it's continuing that strong global growth that has been seen and forecast. And it's one of the strongest growing segments of the technology sector at the moment and continue to be, or forecast to be. So giving much of the world's digital data and software applications on the physical databases that were still static. We're seeing so much of that transition to cloud, and that's been accelerated throughout COVID and the lockdowns that we have seen. So we're not surprised to see that the performances have been strong and continue to be. So we'll see it, have a look at that indices there and see how CLDD has driven over the last 12 months or so, because it is a new listing that did come in March, so it's been the volatile period, but we want to have a look at that in comparison to NASDAQ, because that's where most of those companies will sit. And you can see that it has been volatile since March, so it has been dropping down. So to see that CLDD has been more volatile in its life is true, but it's only been a short life at the moment. And it's got it into number 3 over the last month. We're going to see another interesting one, which is an oil ETF. So under a pure play oil, and we do see that its performance has been quite strong over the month, 12.43%. Now, having a look at this, we do know that coming into COVID, there were 2 crises that happened. There was obviously the pandemic, but at the same time, there was OPEC Plus that pushed oil prices down into negative. If you want to have a look, we did run through an explanation at the time of how and why that happened. So there is a link in the description below of understanding exactly what happened to get this massive drop that you're going to see here on the chart. So this is what happened when oil prices went negative down here. So you're seeing the prices go from $16 on this ETF all the way down to, what was it, $2.40, $2.47. Getting extremely low here. Now we have rallied out of that. We're going to zero into the last year, so you can see those performances, and you can see that it rallied sort of from $4 in the recent run all the way up sort of to the $6.50 region, and then it has been churning sideways. If we zoom in, a volatility contraction pattern. Again, there's a tutorial on how to trade volatility contraction patterns. Obviously, it's a commodity, so it doesn't have the earnings and the fundamentals, but you can apply other fundamental filters to understand the macro global demands there. But you can see that the volatility here, so we're seeing it drop down, have a rally, another small drop, another rally, drop, and then as we're seeing, these drops are getting smaller and smaller, and the rallies are getting muter, smaller and smaller to where we are here. It may whether it congests from here and then bounces out, time will tell, but for the month, it's put on 12.43%. We'll do have a look to see how that stands from the ETF itself. 100% allocation to crude oil. Now, what we understand is that it's West Texas Intermediary, which we see less of the Bowser in here in Australia, less of an influence there. We're working more on Brent, but what we do see is that it's full exposure to that, and then it is hedged for currency movements against the Aussie US, which is critical when we're looking at how the oil price moves here in Australia. Then we move over to the top performer of the ETFs on the ASX in the last month, and it is ATEC, which is another BetaShares ETF. We're going to have a look at that on the monthly scale, on the annual scale here, and can see that dramatic rise from 20, almost 24, closed on Friday, and that's pushed up 12.85% over the last month. This is an ETF that gives us exposure to a diversified portfolio of companies that are spread across the technology-related market segments. So it's IT, it's consumer electronics, it's online retail, and it's also medical technology. So the exposure of leading tech players on the Aussie, such as WiseTech Global, REA Group, Xero, Afterpay, and car sales. We're going to have a look now at what the actual exposure is, because we know these companies very well, but let's have a look at what the current weightings are within this portfolio to get an idea of what's really driving it. 19.8%, we've got Afterpay, and then 12%, we've got Xero. Seek, we've got 8.5, Computershare, 7.1. These are very interesting names to have a look at, because what we do want to see, if we bring them into this same performance chart to have an understanding, we can see what the weightings are that are driving this top performing ETF on the ASX. So we've got Afterpay at 20%. Xero for the month, we've got Xero at 11%. We've got Seek, that's also put on 13%. Then we've got Computershare, massive gainer as well, 8.75%. And then REA Group, what's that, 10% for the month. So you can see they're the heavy weightings, looking at 20, 33, 40, 50, over 50, almost 60% of the indices just there in these top performing companies. And we can say that's why they've put on these massive gains. You can see Computershare, huge move, 14% lows up to 17 just recently. Very positive news coming out there. So they're the top performing ASX ETFs, and it does give us an idea of the thematics that are pushing it. We are seeing performance relative to the NASDAQ that we have been moving on par with the NASDAQ. And fortunately, we've had a lot of Australian tech companies drive it much higher, given the weighting in Australia of hugely towards financials and then secondly towards miners. We do want to have a look at how that's moved into heavyweight. So we've got CBA up 5.59%, and then BHP's down 2.6%, along with the Rio Tinto and then Fortescue Metals, which have been strong performers, pretty much flatlining for the month. That gives us an idea that we're still tech heavy on the runners at the moment. That is still the case in the US and also the case here in Australia. So they're the top leading ones over the last month. And then to sort all of this over the last quarter, we can see that the best performers down here, REA Group, long NASDAQ, Combank 20%, SEEK 18%, Xero 17%, and then the name that many of us know, Afterpay, is only up 5% for the quarter after a heavy move, a heavy ride indeed. You can see that movement there in the chart. And then over the year, we're going to see big names, Afterpay 66%, Fortescue 59%, oil itself, the commodity or the ETF 52%, Xero 46%, and ERTH 44%. Very solid moves indeed. This is Final Market Points, where we're connecting the leading market themes and the top performing companies for better trading. Again, like the video to support us, comment below to let us know what you're trading, and subscribe for the updates.